Hi everybody, this is Gary Dean, and this is our nightly video report for Thursday, January 7th, 2016. So, January is not starting off too kindly for the Bulls. I did take a third of a long position today. I still, I'm down a little bit on it, but I'm not, I would have taken that trade probably 10 times when I looked at it. For the reason, here is the gap down. And we actually got a nice bounce on it. I was up close to $700 at one point, but it gave way towards the end of the day. And it doesn't shock me. That's if I was really, really confident that this was the lows, I would have went half or even more than that. But when you have a big gap down, a lot of times this is not going to be the low. You're going to get a bounce and either test the lows or break it. And that we did break it today, but I still think we're closer to some type of low than we are, than dropping a lot more. So this is a 15-minute chart. We have bullish divergences on that. Very oversold here. Notice our momentum is dropping here as well. Granted, it's a 15-minute, so it doesn't, it's not that important, but it's still dropping. And really, the main thing. The first obstacle for the Bulls, they got to get it through this 1972. If they do that, then we run into this 1993 area. I think this is going to be the earliest clue that let's say the Bulls are coming up for air, and if they get through this, the 1993. But then all that's going to do is give them some breathing room to get up to this, up to the 2023. So if it gets up there, I mean, it's a good trade, But the thing is that this is going to be, you're going to find a lot of sellers up in this area because you have the 62% retracement, you have the moving average, you have resistance. So if we get through this level, I wouldn't be surprised to see say a slingshot type move up to here, and then from there we get, we come back and maybe test this area here, the 1990. And what it will probably do is try to form some kind of inverted head and shoulders pattern, because that's really what the Bulls like to do off of these lows. So it would make sense if we come up here. Maybe they have to come a little bit lower first, but excuse me. But the move, I'm expecting my first target, say, because we got long right around here, right around that 1963 area, or a little bit lower than that, actually, 1960. So if we bump up and we get that short covering move up to this level here, I'll probably take some profits and then look to reload up down at this 1993 area. And if that, I'm not even sure. Really this is a trade for a move up to here or to close the gap up at the 2048 level. So we have bullish divergences. Like I said, the first line in the sand, 1972. If they get above that, then if they really need to get through this 1993 to open a door for a move up to the 2027. So let's take a look at some of the longer term charts here. This is a daily. You can see we're getting pretty close to oversold levels now. We do have bullish divergences. I mean, it's not really because you kind of like to see them like this before you see the bullish divergence. But in any case, there is a bullish divergence. Why I'm saying they may have to head a little bit lower first. Here's a 78% retracement is at 2024. So they may have to come down here first and test this before heading up. But they closed the gap. That was the main objective here. Now, again, I mean, it just seems horrible. If you have been long from up here, you're crying because this market has gone straight down. But in the grand scheme of things, from this low to this high, we still haven't even retraced 78%. So it's not as bad as as it seems right now. It's real bad if you got long here and listened to Kramer and the rest of the people on CNBC, or got long here or got long here, yes. But getting long here, I think, is okay, because if we come down, I'm going to look to probably buy this 1924 area. And like I said, the I'm expecting that this gap is going to get closed before any larger drop actually starts. So again, 1924 is fib retracement. Now on the weekly chart, we have this long trend line right here. They don't really mean a whole lot, but I'm just showing you we're right at one right here. So again, if the bulls came down a little bit more, broke it, maybe caused a little bit of panic, what's it going to do is, we've seen these breaks before where you get these long tails and then they rally back up again. So there is support here. And if we just take a look at the 60-minute chart, we still have the bullish divergences in place, even though this move has come down a lot. And really the best way that I'm looking at this is you have your A, B, C of an A. And now what happens is we made an A, B, C of a B. And now we're making an A, B, C of a C here. So I think that if we find a low here, we could see a move go higher than some are anticipating. And again, 2023 is a first target. Above that, then we're looking somewhere at the 2048. So those are really the areas that I'm looking at as far as for the profit. But remember, we got long here. So if it does come up to these levels, it will be a decent trade. So we have the bullish divergences. Not a lot of people are looking for this market to head higher. A lot of crash talk. To me, I think we're closer to forming some type of low rather than about to crash. So with that, let's see what plays out tomorrow, and have a great night.